This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, looking pretty good for the market. I mean, not bad. If you map what's happened from the lows in March, we've seen a pretty good build-up. This morning, global cues not great, but we have our hands full.
Well, you know, March 20th, it seems to be that date and maybe that line in the sand. Last year as well, we made a low on March 20th, when we went down, I think, to around that, 17,000 odd level, and we bounced from there. And this year, optimistically talking about 21,700 was the low that we made on March 20th. So let's see how that goes.
Talking about March, what was the when did the COVID low happen? March, right?
Yes. That was 2020,
March
yeah.
28th, I think, or 27th or something, if my memory serves me right.
That was 7,500 odd intraday low, I think.
So always buy the dips in March, right? That's worked out well for investors.
All right, well, let's just quickly run you through what you need to know as we begin another trading session. So, you know, you basically had the market yesterday hitting a new high. The Nifty hit a new high in the opening first few minutes of, in the first couple of hours of trade. And then basically it went sideways, not very much, right? But the point is a new high, not breaking below earlier levels. Thursday's big sell-off from the highs, not followed through on the downside. You know, basically negated any bearish views. You can perhaps now, at the margin, be more confident about the fact that the correction or the sideways 3.5% fall that started from the middle of January, 11th or 12th of January was the high, all the way to this March low, that perhaps we've put behind. So that's been negated. That's point number one. Now, having said that, overnight, the action is, a little, not disconcerting, but we've seen a big jump in US bond yields, right? And that's on the back of strong data. So you had US manufacturing PMI. People were expecting a continued contraction in the PMI number, and it actually came in stronger. Actually, it was much stronger than what anyone really expected. People are pointing to the fact that the subcomponent, the employment subcomponent within the manufacturing index is still in the contractionary zone. That's about 47.5. So in line with expectations, and that shows labor market is still slowing down, etc., etc. And so this bond yield, the rally in bond yields perhaps will fade. But that's, of course, for the future. We'll get ISM services as well. And I think that will be more important because services inflation is more sticky. In any case, last night you had the 10-year, which went up 12 basis points. Actually, the 5-year, the 10-year, the 30, all saw exactly the 12 basis point jump. The 10-year at about 4.32 now. The dollar index left off at about 105. So almost a 0.5% jump in the dollar index as well. So, you know, these two at least have moved in the direction. We don't like them to move in. Equities were choppy. The Dow was down 0.6%. S&P flat, down 0.2%. And you had the Nasdaq, which was slightly higher. Neither here nor there, right? You can't really say there's a clear trend here. Gold was up 0.5%. We finished at a new high at 22.40. Oil prices, last night were flat, but we're just under $88 a barrel, treading water. And so it's not a very comfortable kind of a mix when you come back to trade and you want to look at what to do today in a very short-term kind of a time frame. So global sort of the picture is a little more adversarial. But in any case, with yesterday's rally, the Nifty, as I said, has negated the bearish setup and perhaps is now looking at the upside. So what are we looking at? The first upside level, of course, is the high, which is 22, the earlier high, 22,526, which we crossed. I think the new high was made at about 530-ish kind of level. So, that's immediately what comes to mind. That itself is about 60 or 65 points away. And then you're looking at levels of about 23,050 or so on the upside. On the way down, you could look at the daily moving averages now, away from very short-term hourly averages. The 20-day then comes in at about 22,200. And you got the 40-day exponential moving average, which comes in at about 22,019. The Nifty Bank closed above the previous high, and also it closed decisively above the 61.8% retracement of the full decline. That Jan to March decline that we saw has hardly been a decline, but this 61.8 has been crossed. That's a positive sign. And that means that the Nifty Bank also can retest the high, which was 48,161. On the way down, you basically, again, the daily averages kick in. The 20-day comes in at 47,065, and then the 40-day exponential comes in at about 46,736. You got to basically look beyond today, because today you're going to be reacting to some of what came out from the global markets, etc. I think the GIFT Nifty is indicating a slightly lower start, but I would say it's more up than down after the kind of price action we've had over the next few days, here as far as the markets are concerned. The indication is that we'll start about 40-45 points lower. Sonia.
Absolutely. And I think, this has been a buy on dips market through and through, right? If you remember, towards the 20th of March, so many people were talking about possibility of capitulation in the broader markets. Yes, there was a steep fall. I mean, in 1 or 2 days, we saw big cracks. But buying that dip, staying patient, remaining invested, continuing your SIPs was the best strategy at that point. And look at how it worked out. The Nifty is now up 3% from the 20th March low. The low was somewhere around the 21,700, 21,800 level. So that's something that's played out pretty well for the markets. In fact, if you look at the numbers that came in from, the DIIs yesterday as well, DIIs have been buying consistently now for 7-8 trading sessions. And yesterday, DIIs bought about 1,208 crores in the cash markets. 8 straight sessions where you've seen buying coming in. The macro data has also been improving. So, of course, you do have the RBI policy at the end of the week. But look at the GST collection data, right? It's very strong. It's an 11.5% growth that we've seen, the second highest GST collections. And, bit by bit, the macro situation is definitely improving. And that's something that the street likes. Now, a couple of things to watch out for. This morning, you have the auto sales that will be in focus. And largely, it's been a lackluster kind of a situation for most auto companies, whether it is Ashok Leyland. CV sales, in fact, across the board have been under pressure. But even names like Hero MotoCorp have seen a bit of a decline in their sales year on year. So I'm not expecting a great move for many of these stocks. We also have a lot of NBFCs that have come out with their data. So we'll keep an eye out on that. And some of these other names in the consumer space also in focus. But the US markets, just before before I toss it to Nigel, the US markets were under a tad bit of pressure, but nothing alarming. Continues to chug along quite well, just about, trimming their positions a tad bit overnight. So the going is good. The buy on dip strategy is something that continues.
Well, that's right. The troika is not in our favor. The dollar index, crude oil prices, as well as the yields overnight. So, that's not in our favor. But yesterday we had a good start. However, volumes were extremely tepid. In fact, volumes were 15-20% lower than what we've seen on an average in March. And keep in mind, towards the end of March, you did have that volumes were actually lower. And even comparison to those averages, we were lower. Short point is we moved higher yesterday, but we moved higher on rather low participation. So I'll be interested to see how things move from here, though it was a very, very good start to the year. What did the FIs do? Well, they added more longs than shorts, though they remain mildly net short with close to around 55% of their positions on the short side. And in absolute terms, it's around 21,000 contracts. That's much lower than what you've seen in the past. So it's not an aggressively net short market, though the FIs are still short out there. The options data is quite interesting. The 22,500 put as well as call, well, both of them were very, very active. And the sense you get is there is a bit of a strategy that's playing out here, which is a short straddle. What is that? You write the call, you write the put of the same strike, and you pocket the premium out there. The rough premium would be around 230 rupees. So, the strategy that's playing out right now is you're looking to pocket that 230 rupees. 230 minus 22,500 and plus 22,500, which gives you the broad range. So this strategy needs to be successful. Well, you'll need to have expiry, which plays out in the next 2 days, in this range itself. And it seems that is likely to be the case as well, just going by the options data. The reference point, if you want, on the downside, well, you have the 20 DMA. Both of them got conquered on Thursday, and we're still defending that mark. So that's the reference point you have on the downside. Talking about indices, today is a Tuesday, so you'll have the Nifty Financial Services Index that will play out the weekly expiry. Stocks that I'm looking at today, there are 2 stocks and both of them from the AB group. Well, AB Capital, Macquarie has come out of the note. They say that the stock has a potential to double in the next 3 years from here, and they've given various rationale out there. So that's one stock. The other one is ABFRL. They've announced a vertical demerger of business. They're considering that. And remember, it's been a rank underperformer. Because a few years ago, Trent and ABFRL, well, the market capitalization was the same. Just take a look at what it is today. You have Trent that is 6 times the market capitalization of ABFRL. Obviously, ABFRL have some leverage on their books as well. So let's see how the street accepts this. But it seems that some course correction is being done. So I'll be keeping an eye out on both these Aditya Birla Group stocks for today. And the GIFT Nifty is suggesting a bit of a downtick, though the trend continues to remain up. So buy on dips should continue.
Okay.
All right, Nigel, thanks very much for that. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show today. We get you updates from markets across the globe. Robert Sockin, global economist at Citi, will join in to do that. Our research team gets you CNBC-TV18 list of top 10 stocks for the day. At 8:30, we'll do a fundamental stock check. Amnish Agarwal of Prabhudas Leeladhar will be joining in. Well, let's get you some views now. This is on money markets. Abhishek Goenka of India Forex and Asset Management says that the dollar has firmed up overall. He adds probability of a 25 basis point cut by the Fed in June has come down to 57% from 64% last week. He says the RBI has been likely offering dollars around the 83.4 mark to prevent the rupee from hitting all-time lows amid broad dollar strength. He maintains his medium-term range of 82.6 to 83.6 to the dollar for the currency.
All right, and on the bonds, Vishal Goenka of IndiaBonds.com says that the opposing factors at play for the bond markets with technicals such as the start of the new financial year and lower government borrowing program for H1 FY25 to support yields. He adds, conversely, the sell-off in the bond markets in the US overnight due to strong manufacturing data, rise in oil prices, resumption of government bond auctions later this week, and strengthening dollar will keep pressure on the bond prices in the medium term. He expects a 10-year benchmark bond yield to trade in a range of 7.02 to 7.07%.
Well, we've got a lot of stock-specific action to track for you. We get to them in detail in a bit. For the time being, we'll run you through the list itself. So we're looking at TVS Motor, Reliance Industries, AB Fashion, CSB Bank, South Indian Bank, and IRDA. All of them will be reacting to positive news flow. On the flip side, Hero Moto, Ashok Leyland, NMDC, and Bharat Dynamics are stocks that could be starting off in the red.